Good afternoon, good morning to everybody that's attending today's very exciting webinar. My name is Kevin Pree. I'm excited to be the host of this session here. It should be a very informative session, not only about tax in general, but also the Vertex solution that we're here to talk about today. If we can just take a quick second and talk about FMT consultants. Some of you may know us. There are a few that are existing customers actually on today's webinar here, but a number that don't know who we are. We're actually a leading provider of technology solutions here in North America. We have clients across the United States and up into the Canadian states as well. Our firm, while it's located in Southern California, our corporate headquarters are in San Diego, and we also have a satellite office in Los Angeles. We are servicing clients across the states and up into Canada as well. Our folks right now, slide actually just a slight typo there, but we're at 65 team members today and growing rapidly. And our firm, we've been around for a little bit over 20 years. May was our 20th anniversary. The presenters that we have today for you, I'm privileged to kind of share the podium here with Mike Fleming, who's with Peisner Johnson, and Scott Coleman. We'll let these gentlemen actually introduce themselves as they get to their portions of the presentation. But maybe just real quick, when we talk about the partnership that we have with Vertex and Vertex has with Peisner Johnson, our firm, we've always been a firm that wants to focus on being excellent at a few things, not really kind of just good at a lot of things. And certainly from a sales and use tax perspective, that's why we've really focused on the Vertex SMB solution. Our firm, over the 20 years that we've been in existence, have focused primarily in the ERP space with the Microsoft Dynamics product. And then have taken on 2 cloud-based products over the years, both SAP Business by Design as well as NetSuite. And the Vertex solution, the competencies that we've been able to build and the relationships we've been able to strengthen with Vertex have only been possible by the fact that their solution actually connects to all 3 of the ERP products that our firm services. And so that kind of lends itself right to that core value of being excellent at something rather than good at a lot. I want to talk about some just quick housekeeping things related to the webinar itself. Right now, everyone's muted, so there won't be any audio questions being asked. Only the presenters today will actually be speaking. There's going to be the ability to actually ask questions along the way. We're going to have a few poll questions as we're going through this, but if you have a question that you need an answer to, within the GoToWebinar control panel that you should have on your computer's desktop, you'll see a question area, and you can go into that and actually type your questions, and we'll be responding to those at the end of today's session. If for some reason we're under some time constraints and not able to complete all of those questions, we'll ensure that we follow up with each and every one and make sure that they get answers to every question that's being asked. As far as CPE credit, all the attendees that are looking for CPE credit, you have to stay online for 50 minutes of the session today, and you actually have to answer the 3 poll questions that we have as we're going through the presentation itself. The CPE credit will actually be sent to you within a couple weeks of the webinar. Mike from Peisner Johnson, one of our presenters, will be contacting. He'll be your contact for this. And regardless of whether you're here for CPE credit or not, I encourage you to stay to the end. I've seen the dry run of the content here, and it's kind of phenomenal content, both in just informative information as well as a solution that Vertex is going to walk us through that supports these things. So as I talked about before, just briefly, our partnership with Vertex, we're excited to be a partner of them, but Vertex is actually a business division of Vertex SMB is a business division of Vertex Inc., and it helps to automate sales and use tax compliance by enabling calculations and returns in a single cloud-based solution. And Vertex offers flexible service levels, and really kind of major differentiator is this feature of pay-as-you-go pricing. There's no upfront fees, and part of that is why we partnered with Vertex SMB, because they have the customer's best interests in mind, just like we do. Peisner Johnson, Mike Fleming is here as our presenter. Peisner Johnson and Company is joining us. They're a premier partner of Vertex SMB. They're also a CPA firm with a clear mission, and that is to solve clients' state tax problems. And because they focus exclusively on state and local tax, they've developed a deep understanding of the subject, some of which they're going to share with us today. I'm really honored to have Mike Fleming, the Director of Special Projects and Partner Relationships, here as our presenter today. And since we have so much to cover in this hour, I'm going to turn it over to Mike so that he can kick off our presentation. Mike, you have the floor.
Thank you, Kevin. Very warm introduction there. And just really quick, a little bit about us. We are a CPA firm, but we're probably not like any of the CPA firms you're used to dealing with or know. All we do is state and local tax. It's all we've ever done since our founding back in 1992. We don't do any federal tax work. We don't do any financial audit. We don't do any write-up, just state and local taxes. And we do it in all 50 U.S. states, all of the U.S. territories, and then all of the Canadian provinces and territories also. We think that we're unique in that we are a CPA firm that takes this very unique view on their practice. So we've got a lot of information to cover today. A couple of points I want you to keep in mind as we go through this. Number one is materiality. I'm going to be talking from a point what the states assert you should do. However, just because the state asserts you should do something doesn't mean that necessarily makes good business sense to do so. And sorry about that, makes good business sense to do so. So just keep in mind materiality. And also, when you're doing tax planning, it pays to be conservative. In other words, if a state, there may be gray areas. This is not all black and white. But it's a lot easier if it's a gray area to do what the state asserts that you should do, or what you believe that the state is going to assert what you should do, than taking an adverse position and then having to fight it at some point down the road. And now you've got 3 or 4 years worth of back taxes plus penalty and interest, plus the costs of fighting that. So the time to be aggressive is when you're under audit. The time to be conservative is when you're planning on how to be compliant going forward. So let's start with the first poll question. We like to gauge everyone's knowledge here. So what's your level here? Are you a beginner? You're an intermediate? You're an expert? That's what we call Nexus experts. I can see the results coming in here. We've got mostly beginners. We've got a couple want to know what is Nexus. No experts so far. No one here to challenge me. All right.
I'll keep you honest, Mike.
Okay. Now I know I'm in trouble. All right. Why don't we close out the poll and share some results there? And if you didn't get a chance to vote. I'm sorry?
Sorry, I was going to give you the results, but you can certainly read them yourself. So.
Okay. We just throw them up on the screen there. There's the quick results. If you didn't get a chance to answer, then just get with me after the fact. All right. So since there are so many beginners here, let's really start out with a real simple definition. What is Nexus? And nexus is the term we use to describe the link or connection or tie, something that ties you to a state where the state can then force you to either pay its taxes or collect taxes on its behalf. And if you don't have this connection, if you don't have this link, then you really don't have any issues, because it all starts with nexus. It all starts with this link or connection. If you do have this link or connection with the state, then the state can assert that you need to collect its taxes. And if you don't, then they can't do that. Now, when it comes to sales tax, there has to be some minimum level of physical presence that's required. We'll talk about income tax a little bit also. Not required for that, but for sales tax, you have to have some sort of physical presence. However, what you and I consider to be physical presence, or any person with common sense sometimes consider it to be physical presence, and what the states consider to be physical presence, or even the Supreme Court, can sometimes be very, very different. So let's take a look at some of the underlying court cases. We're not going to go too deep into this because there's a whole bunch of it, and we've got a 3-hour webinar if anyone's interested where we really do a deep dive and get into the court cases. But there's 3 cases I want to touch on, and the first is Quill Corporation. And Quill Corporation is important for a couple of reasons. Number one, Quill Corporation was selling into the state of North Dakota. They were using catalogs primarily, and they had 3 diskettes. This case was back in 1992, and North Dakota said, you know what, you're taking advantage of our economic climate in this state, and we think that's enough of a substantial nexus that you need to be collecting and paying our taxes. And Quill said, oh no, it's not enough. And it goes to the Supreme Court, and the Supreme Court decided in favor of the taxpayer. And the Supreme Court said at least for sales tax, you have to have some sort of physical presence in order to create substantial nexus. So it's important the wording they use there because they specifically mentioned sales tax. So by inference, the states have picked up the ball and run with this economic nexus for income and franchise taxes. But for sales tax, and we're going to concentrate primarily on that today, you have to have some sort of physical presence. Well, North Dakota's backup argument was, well, they've got 3 diskettes here and they own those. So that is deemed to be physical presence. And the court came back and said, no, you really have to have more than the slightest physical presence. Now, they didn't say you have to have substantial physical presence, just more than the slightest physical presence. And the problem is they did not define what more than the slightest physical presence is. So we know it's more than 3 diskettes. And for those of you who don't know what a diskette is, I'm probably showing my age here, but it's the predecessor to a CD that you pop into the computer. Just think 3 CDs in a state. Is that enough to create physical presence? Well, the Supreme Court says no, but they didn't tell us what actually does. Another reason why Quill Corp is important is because there were 2 issues that everybody looked at on a constitutional basis as to what controlled nexus, and one was the Due Process Clause, the other was the Commerce Clause. And in this case, the Supreme Court said, you know what, this is really not a due process issue. In this day and age, due process just isn't an issue for companies that are doing business in multiple states. It is a Commerce Clause issue, though, so we've had a number of cases. We're done for now. This is a really, the Congress is supposed to be dealing with interstate commerce. So going forward, we're going to put the ball in their court. Well, that was in 1992, and the Congress has done absolutely nothing since that time. So the states are getting more and more aggressive every year, and there's, taxpayers are appealing to the Supreme Court, and the Supreme Court is refusing to hear these cases. So it's giving, credibility to what the states are actually asserting. Quill Corp also didn't overturn previous cases, so we've got Scripto and Tyler Pipe, and these are very similar, and I chose these 2 cases because these both deal with third parties, and most people that I talk to say, what, third party? How can a third party give me nexus? They don't work for me, I don't control their hours, I mean, they're totally independent. I'm hiring them to do a job for me. How can that happen? Well, I'm going to use the language from Tyler Pipe. This is one of the more well-settled issues of nexus, though. And in Tyler Pipe, I'm going to paraphrase the first part here. Tyler Pipe said, it really doesn't matter if someone is working for you exclusively, if you're calling them employee, or if they're actual third parties. It doesn't matter if they represent you exclusively. They could be out there representing a whole bunch of different companies. It doesn't matter if they work on a full or part-time basis. Here's what does matter. If they're helping you to establish or maintain a marketplace, then that's going to be a nexus creating activity. And that language is so important because the states picked that ball up and ran with it. And a lot of states out there now, they'll give you a list of activities, and then somewhere either in their statutes or regulations or guidelines, there's going to be some type of clause that says, and any other activity that would help to establish or maintain a marketplace. So it's really a catch-all net. Now, some states don't have that in there, but they still rely on it. I mean, the Supreme Court said it's okay, so what state's not going to rely on it, or what state court is not going to rely on a Supreme Court case to see if an activity actually helps to establish or maintain a marketplace? And when these cases happened, both of these were solicitation, but since that time, establishing and maintaining a market is a big umbrella. And lots of activities are underneath that now, like training, installation, implementations, a lot of subcontracting. All of that falls underneath that umbrella of helping to establish and maintain a marketplace. So you can see, what you and I think is physical presence. It can be very different from what a state thinks creates physical presence. So let's actually talk about some activities that do create physical presence, create physical presence for you, create nexus for you. You're going to have your obvious nexus creating activities, and when we talk about a physical presence, one of the first things that comes to mind is real property. So if you're leasing or if you own real property, whether it be office space or a manufacturing plant or a warehouse, that's going to be a nexus creating activity. It's a link to that state. Employees. If you have an employee in a state, that's a fairly obvious link with that state. And then you have your less obvious, and a number of them here may surprise you. Number one, having inventory in a state. Just about every state out there is going to say that having tangible personal property in a state, or having inventory in a state, which is tangible personal property, or using a warehouse in a state, you don't have to own the warehouse, you just have to use it, is going to be a nexus creating activity. And this is a real issue for a lot of companies out there, because more and more companies are starting to use third-party fulfillment centers. And they don't realize when they're sending their inventory to this third-party fulfillment center that they have nexus in the state where they're sending it to. What makes matters worse is if you're using Amazon. Amazon's FBA program, is a great program, and it's not just for mom and pop businesses anymore. I mean, you've got some really large businesses using it. But Amazon, in their agreement, says that they can move the inventory without prior notice or your permission to any one of their warehouses. And they've got warehouses in that they use for FBA in 18 states now. And 2 of those states don't have sales tax. So you could have nexus in 16 states when you didn't even realize you had nexus in 1. So that's something that if you're a CPA out there, you got to be looking at your clients, and if you're utilizing third parties, something you got to keep in front of mind. All right, here's a real big one, and this is employee travel. But it's not only employee travel, it's wherever independent contractors and subcontractors are traveling. So, we talked about them creating nexus for you. It's not only their home state, it's anywhere they're traveling to help you establish or maintain a market. And when it comes to employees, they don't even have to meet that criteria. States like Arizona and Michigan, if you're in their states for more than 48 hours, and that's cumulative, not consecutively, and that's a pretty low threshold. then if for any reason whatsoever, then you have nexus in those states. All right, next, this is telecommuting, and pretty much all states have some sort of opinion on this. A lot of them, you know, just like Arizona and Michigan, you've got someone there for any reason, it doesn't matter what they're doing, it's going to be a nexus creating activity. Some states are going to actually look at the activity, and maybe if they're just doing some programming for you and they're working from home, well, they're not going to see that as a nexus creating activity. So some states will actually look at what that telecommuter is doing from home. Some states will not. So a lot of companies allow their employees to telecommute, not realizing that it's a nexus creating activity. All right, so this one creates some issues because for income tax purposes, there's a public law, it's called 86-272, or the Interstate Income Act of 1959. And what it basically says is that if your only activity in the state is solicitation, and it's the solicitation of tangible personal property, something you can touch and feel, and only tangible personal property, then the orders have to be sent outside the state for approval, and they have to be fulfilled from a point outside the state, then the state is forbidden from charging you a net income tax. There's a lot of ifs and ands in there, so it's in today's environment, it's hard to meet all of them, but some companies do. And there are ancillary activities that are considered incidental to sales. The Multi-State Tax Commission puts a list of them, and delivering your own trucks used to be on that list. And some states actually consider delivering your trucks for income tax purposes to be a protected activity. But for sales tax purposes, I don't know of any states that are not going to say this is nexus creating. So all states are pretty much going to say delivering your own trucks is nexus creating. Then you've got trade shows, and this is an example of an activity that can vary widely between states. And there are a number of states out there that say, you know, they'll take the position, if you even visit our state to attend a trade show as a consumer, that's going to be nexus creating. Only a handful of them, but they'll try to be aggressive and make that statement. Then the next group says, hey, you can come to as many trade shows as you want, but if you come as an exhibitor, then that's going to be nexus creating. Then you have the next group that says, you can be an exhibitor, you just can't solicit while you're here. If you start soliciting, then that's nexus creating. And then there's the next group that says, you can even solicit while you're here, but if you take any orders, then that's going to be nexus creating. Then you've got Nevada. And Nevada wants everybody to go to Las Vegas. So they take the position that trade shows, seminars, none of that gives you nexus. And they actually have a special provision. If you actually sell while you're in the state of Nevada, at the end of the show, you can turn it into the promoter, and no strings attached. If the promoter doesn't accept it, or for some reason you miss the promoter, when you get home, just send it on into the state of Nevada with a note, and no more connections for you. There also, when it comes to trade shows, you know, this is the one area in sales tax where, you know, a lot of states have clearly defined de minimis activities. So a state like California is going to say, well, if you're here for less than 2 weeks and less than $100,000 is generated from the show, then you've got a safe harbor. So trade shows, something you got to look at on a case-by-case basis. There's no hard and fast rule as to what you can say a state will generally do. All right, so how many of you here have heard of click-through nexus or affiliate nexus? This is something that actually goes back to Tyler Pipe. Click-through nexus is when you've got a link on your website, you're steering business to another company, and if someone purchases something from that other company through their website or however, and then they pay a commission or referral fee back to you, that's called click-through relationship or an affiliate relationship. And New York was the first one to pass these laws, and it was back in 2008. And they said, you know what? If there was just one independent sales rep in Tyler Pipe, and they didn't even represent Tyler Pipe exclusively, and the Supreme Court came back and said, hey, that's nexus creating. Well, how about a whole bunch of people sending me business and me paying them referral fees? You know what, sort of makes sense, and sort of doesn't make sense, but that's the argument that New York made, and it went all the way to the highest court in New York. It was upheld. It was appealed to the Supreme Court, and the Supreme Court refused to hear it. So it is the law in New York, and since that time, you have had a bunch of states jumping on the bandwagon. It seems like every week there's either a state that is actually it's becoming effective or it's being introduced into legislation. So this is something that if you have these types of links on your website or these types of relationships with people who have links to your website, you've got to look out for. The next thing, and this is really out there, and this is something that the state of Texas did back last year. And tangible personal property is something that you can touch, taste, feel. Software usually doesn't generally fit that category, but a lot of states, in order to tax software, have defined by statute software to be tangible personal property, even when you download it. So when you download software, I'm not sure how that's tangible personal property, but hey, if that's the way that all these states are getting around it, you know, that's what we have to live with. However, here's what happened in Texas. Utah company, they have a customer downloads their software in Texas, and when you are selling software, you're not always selling it outright, you're usually licensing it. You have some sort of ownership interest in that software. So the state of Texas comes back and says, hey, one of your customers downloaded software, that's tangible personal property. You have an ownership interest in that tangible personal property. You now have nexus in the state of Texas. Well, that is absolutely ludicrous. Texas does say having tangible personal property in the state of Texas is nexus creating, but how does that fit the physical presence test? How does that fit under the Supreme Court's ruling in Quill? And it doesn't. I mean, something downloaded has no physical presence. So we think that this is going to be overturned. However, it was upheld by an administrative law judge. That was back in September. So now it's got to go through the court system, and if it gets overturned, and we think it will, then everything will be great. But if it doesn't get overturned, then this is something we need to keep an eye on, because you know, if you're selling software into Texas, you've got to be aware of this. Right now, this is the law of the land, and how many other states will jump on the bandwagon if it's not overturned? So that is something that we've got to keep an eye on. All right, so let's do a little bit of a wrap up here, and I'm going to send some links out to some actual nexus creating activities. It'll be a follow-up email. I'll provide it to Kevin, and he'll put it in the package that's the post webinar email, and it'll give you the 10 most common nexus creating activities that pretty much all states are going to look at the same, and then 10 activities that states are going to look at on a very different basis. All right, so let's go to the next poll question. And what sales tax creating activities are you most concerned about? All right, independent subcontractors, well, they took the early lead, and now it's inventory or TPP. All right, looks like I've put some people to sleep already. If you haven't gotten a chance to answer this, just get with us after the fact. But for now, let's close out this poll. And there's your results. All right, so let's move on to income tax nexus a little bit quicker. I mean, a little bit. We've got to run through this quick. We're under some time constraints here. So income tax nexus, is it easier or harder than sales tax? nexus? Well, depends on the state. Because there's no physical presence requirement, it may be easier, and that's where we have an economic nexus. There are some states that say if you have just a certain amount of sales into our state, then that's going to create an economic nexus for you for income or franchise tax purposes. However, then you've got Public Law 86-272, which I spoke about earlier, and that's going to give you some protections. All right, not all of you, because nowadays a lot of us are mixing services with our products. Maintenance, that would invalidate this. So here are some of the states and some of the actual thresholds. You've got states with very large thresholds like New York. It's $1 million, and you've got states with very low thresholds where any positive apportionment factor. So you've got $1. You know, in theory, the state of Virginia says that you should be paying their income taxes. Now, that's where materiality comes in. You know, if you owe $1 to a state, well, or you've got a dollar apportioned to the state, why in the world would you spend good money to become compliant there? Because the cost of compliance is going to be so much greater than the cost of non-compliance. All right, so here's the actual wording of PL 86-272. I'm going to skip through this pretty quickly. We went through this before. Can't charge a net income tax if the only business activity is solicitation of orders of tangible personal property. So very, very narrow there. And if you're, for those of you who are using third-party fulfillment centers or who are drop shipping, and the inventory is starting off in the state that you're shipping to, again, that would invalidate this. And once it's invalidated, it's not invalidated just for the one sale, but for all of your sales into that state. Remember, now we're talking income tax and not sales tax. All right, so let's go over some nexus nonsense. These are things that I hear over and over and over again, and I just like to point out it's just not true. So I only have nexus if I have employees or property in a state. I probably hear this 2 or 3 times a day. And sometimes it's from CPAs that we're working with. We work with a lot of CPAs because some CPAs, you know, they're very, very good at what they do. They just don't usually do sales tax. So that's why we're a perfect fit for them. Public Law 86-272 gives me ultimate protection. Well, actually it doesn't. It's very narrow in its scope. Back in the 50s when it was passed, we had a totally different business climate, and it gave good protection then. By the way, this was passed as a temporary law. And when Congress passed it, they said this is just a stopgap measure until we have time to figure out what a good answer is. Here we are over 50 years later, and we still don't have a permanent result, a permanent solution for this temporary law that was passed. It tells you how quickly Congress moves. But along those lines, I want to go back to Quill too, because I should actually put this on this slide. A lot of people think that Quill is the be-all, end-all, and it was a win for taxpayers, but it's not this giant shield you can wrap yourself in and say, well, only Congress can say where sales tax is. Well, that's not true. Hey, physical presence, I have to have a building. That's where you get this, only if I have employees or property interstate. That's physical presence. Now, as we've discussed, there's lots of types of physical presence. Independent sales reps don't give me sales tax nexus. That relates to third parties. People find that incredulous sometimes. And then here's the other one. This goes the other way. Some people think, you know, they hear about this marketplace fairness and all this other talk out there about economic nexus, and they think that anywhere they have customers, they have nexus, and that's not true either. You do have to have some sort of connection with the state, and just having a customer there in most instances, and especially for sales tax, is not enough. All right, so how do states find you if you have nexus? Well, biggest way is they audit your customers. And when they're auditing your customers, they're looking not only at their sales to make sure they've collected the right amount of sales tax, but purchases. And if there's no sales tax on those purchases, then they're going to put you on a lead list. And you really don't want to be on that lead list. Doesn't mean you're going to get called right away. Heck, you may never get called, but they have special task forces whose sole purpose is to follow up on these leads. Information sharing with other states or the IRS. We mentioned that independent contractors give you Nexus. It's real easy for a state to go to the IRS and say, IRS, please give me a list of everyone in my state who's actually received a 1099, because you're probably paying these people with 1099s. And then they're going to say who issued these 1099s and compare it with everyone who is registered for sales tax, and all of a sudden you're on a list. Former employees, every state has a hotline or somewhere on their website where they can turn you in for non-compliance. So you've got former employees, competitors, all of these people can turn you in, and then the task force starts following up on the leads. And one of the things they do is they send out one of these Nexus questionnaires, and you don't want to wait until you get one of these questionnaires in order to do something. You really want to be proactive and work out these issues prior to getting this, because once you get this, that means the state has contacted you. And if a state's contacted you, your options are limited. There are mitigation programs out there that you can take advantage of, but you can't take advantage of them if the state contacts you first. So if the state finds you before you get with them, there's no statute of limitations because you've never been registered. So they can go back, in theory, to the date you started doing business. In reality, they go back 7, 10 years, 7, 8, 10 years routinely, and the penalties and interest are up to 60%. That's a big mark. It's going to hurt, and especially if the states are talking to each other. So problem never goes away. It only gets bigger with time. So we're going to move along a little bit here. We're going to talk about how do you fix the problem. Well, the first thing you got to do, having Nexus is not a death sentence. Maybe what you sell isn't taxable in that state. So in order to fix the problem, you see if you have Nexus. Next, you got to determine if what you sell is taxable. Then you got to determine if you have any past exposure, and once you determine if you have any past exposure, you can rank your states in the order that you want to take care of them, and you've got options. Maybe you do nothing. Maybe there's not that very much exposure there at all for you. Maybe you just register on a going forward basis. Maybe your past exposure is minimal, or maybe your past exposure is large and you want to take advantage of an amnesty. And amnesty is a tricky word. There's a lot of them out there. They're not true amnesties. You still have to pay the back taxes and you have to pay penalty and interest. Voluntary disclosure agreements, if you have any past exposure, is probably going to be your best bet because they do limit your look-back period where amnesties generally don't, and they're going to waive 100% of the penalty. And then some states like Texas, they waive 100% of interest. Only about 5 or 6 states do anything at all with interest, though. And so instead of going back 10 years if a state finds you, maybe they go back 3 or 4 years if you step forward voluntarily. All right, let's do the last poll question here. All right, coming in quick. Looks like let's close out that poll. Looks like 55% of you are entering new markets. All right, so I'm going to wrap up here and just tell you what are some costly mistakes. Ignoring the situation, probably the biggest mistake that you could make, because remember, these problems don't go away with time. If you've never been registered, no statute of limitations. Failing to collect tax at the time of sale. That's the greatest tragedy in sales tax. I mean, if you collect it at the time of sale, it's going to come out of your customer's pocket. If you collect it, if you are found by a state 2-3 years down the road, it's now coming out of your pocket, plus the added insult of penalty and interest. Registering without a VDA in place, if you have any type of past exposure, one of the questions on that registration form is when did you get registered? And then remitting tax to the wrong jurisdiction. Yeah, a couple of you may chuckle about that. It's a very common problem. So make sure that if you are collecting tax, you're giving it to the right jurisdiction. All right, at this point, I'd like to turn it over to Scott because we can talk about getting you on track, but how do you stay on track? Once you figure out what you need to be doing, you need a solution like Vertex or a partner like Vertex to make sure that you're staying on track. Scott?
Thank you, Mike. I appreciate it. I tell you what, I sit in on some of these webinars with you, and I seem to learn something new every day. So I appreciate the presentation. I know everybody else does as well. So as Mike mentioned, so you have Nexus. Now kind of what do you do about it, right? And that's what we're here to do. That's what we're here to talk about. So let me make sure I just got this up on the screen here. So the first challenge that you're going to be facing is keeping up with the rates and the rules in the over 10,000 jurisdictions nationwide. And as Mike was talking about earlier, there's different rates and rules regarding in each jurisdiction regarding product taxability, different rules around use tax versus sales tax, and as Mike shared, each jurisdiction is looking for more revenue. They are changing legislation constantly around that, and hiring more auditors and becoming very aggressive as they go out there and try to make sure that they're collecting everything that they possibly can to be able to stay on budget. The next challenge you face is just the constant state of change that is the SUT landscape, right? Most companies don't have sales tax experts on staff, and it's very overwhelming to keep up with all the law changes that we've been talking about, the rate changes, and just overall compliance, form updates, filing guidelines, when should you file, what should you file for, how should you file it electronically, via paper, how often. All those things can be very frustrating for a company, and most companies just don't have the bandwidth to keep up with everything. So you've determined that you have Nexus, right? You've reached out to Mike and his team at Peisner Johnson. You guys have done some studies. You realize you do have Nexus. You realize that there are challenges, though, right? In keeping up with all the change and keeping up with all the jurisdictional information that you have to keep up with. I mean, it's certainly one thing to get a rate one time, but the rate doesn't stay the same, right? So you've got to constantly be able to keep up with that. And so you realize you've got these challenges. You've got the Nexus. And so here's our friend back saying, now what? Now what do I do with that? Well, we think the best way to approach it is to automate it, right? Try not to use your internal resources to manually keep up with these tasks. Automate them. So let's take a quick look of the landscape of the market today. So our research indicates that only about 10% of companies actually automate their sales and use tax processes. Now, because I am a math genius, I have figured out that that means that 90% of companies either partially or entirely handle this process manually. Why would they do that? After everything that we've learned today and all the complexities and sort of constant change that's happening, why would a company continue to do it manually? Well, historically, there's been a lot of barriers to entry out there. There's high upfront costs, right? The licensing costs to get started, the resources to get started. It's very complex. It takes a long time. It takes me months to get it all integrated and working correctly. And it's expensive. It's expensive up front, and it's expensive ongoing, right? And so people a lot of times don't have the financial resources to attack this problem, and so they do it manually. What we've done is we've brought a solution to the market that's gonna handle those barriers because we have no upfront costs, we're very easy to implement, and we use a true pay-as-you-go pricing model that we're going to talk about in just a touch more detail in a minute. So Vertex SMB, the solution we're going to quickly talk about today is first and foremost simple. It's an all-in-one end-to-end solution. It is Vertex Incorporated, right, the corporate Vertex that's been sort of right-sized and scaled for the small to medium business market. It is 100% cloud-based, and it's very quick and easy to set up. A little screenshot on the right-hand side there of our GUI, which we think is very user-friendly. There's a lot of information on each page, but very easy to read. The solution's affordable. There are no setup fees, and we use a true pay-as-you-go pricing model. You only pay for what you use that month. It's proven inaccurate because in the background it uses the trusted Vertex tax engine. And so in talking about Vertex SMB, which as Kevin mentioned is a division of Vertex Incorporated, you can't talk about Vertex SMB without talking about our foundation. And our foundation is Vertex Corporate. A few stats to throw up on the screen there, but the big picture here is that we've been in business for almost 40 years. We consider ourselves the gold standard in tax compliance. We have lots and lots of happy customers worldwide, and they show us they're happy by renewing over 90%, 95% of the time. So Vertex SMB, what is that? That is a dedicated division to the small and medium business market. Okay, that's something we started a couple of years ago because we felt like the market was underserved. And what Vertex SMB Tax Central is a tax calculations and returns system combined into one seamless offering. Okay, so let's dig into a little bit more about what that covers. The product itself is called Tax Central. We like to say it's what better looks like. As I mentioned, it's an end-to-end, all-in-one solution. That means we're handling your tax calculations, accounting for product taxability and exemptions. We are handling your exemption certificate management, including the image storage. We are producing signature-ready PDF returns at no additional cost, by the way. And we have the ability to file and remit on your behalf. We have a user-friendly interface. I showed you a quick picture of the portal. Our cloud-based portal is where everything happens. It's where you register. It's where you set up your company, your exemptions, your product taxability if you have any, and it's where you report, do your returns, do your filing, do your remittance. It's all in that one portal. You don't have to go to different places. You don't have different modules that look different. It's all in one place. It is affordable. This is one of the key things, right? Because the financial constraints are one of the biggest ones that people face, and the reason they didn't get into SUT automation. We have zero upfront fees. Again, zero fees upfront. No licensing fees, no pay me a year in advance for how many transactions you think you might do this year, because we are based on a truly pay-as-you-go consumption-based pricing model. You do X transactions this month, that's how many you pay for. You do Y transactions the following month, that's how many you pay for. So, and all of our pricing information is very transparent, and if you'd like to take a quick shot and see what your monthly might be, jump onto our website and look at our pricing calculator, which will give you an estimate right there on the spot of what your monthly fee might look like based on your transaction volume and the number of returns if you'd like us to file returns for you. In a nutshell, it's proven, it's accurate, and it's simple. So you're saying, Scott, well, it's great. I appreciate that you guys are out there, but you know, I've looked at some other stuff in the past. There are other people doing this in this space. What makes you different? It's a great question, and it's very important. The answer is very important. I think first and foremost, the thing that sets us apart is the fact that we are Vertex, right? We've been around for a long time, and we have been the gold standard and trusted by many, many companies throughout our history. We have a great team of professionals that keep up with all that stuff that Mike's been talking about, that I talked about, all those changes and all those little intricacies that are really difficult unless you're a sales tax expert to keep up with. That's what our people do, right? So they're behind the scenes doing all that, keeping all that content up to date, which leads to what we believe is the best calculation on the logic on the market. So the right rate and the right calculation logic based on exemptions, product taxability, etc. Second thing that sets us apart is we are the industry's first fully automated offering. Others talk about the fact that, you know, they can do all these things, but they're sort of different modules that have been sort of lumped together. Our system was written from the ground up as all one system, and we handle everything from config, calc, return gen, filing, all in that single portal. Everything is kind of in a wizard from a walkthrough standpoint, and so it is very easy to get set up. It also can be almost plug and play for simpler setups. If you don't have a lot of product taxability, or if you don't have any exemptions, the initial setup can literally be done in a few hours, and definitely within a few days, versus kind of the weeks and months that it used to be with the more enterprise-based solutions. And finally, I think the thing that also sets us apart is the financial model, right? The fact that we don't charge you for a year's transactions in advance. We have no implementation or setup or licensing fees of any kind. You don't pay for the ERP connectors, and you only pay for what you use that month. And oh, by the way, if you on our professional level subscription, you get signature-ready PDF returns at no additional cost. And finally, our integrations are all certified by us. Now, we don't write the integrations. Third-party partners do write our integrations, but we are there every step along the way, and not only are they certified by us, they're supported by us, which is very, very important. So how can we help? Well, there's two ways we can help. The first way is if you have an ERP with a pre-built connector that we have at this moment, and they're listed on the right there, and Kevin sort of indicated that one of the reasons we're such great partners is because what they support, we already have connectors for. And so if you have an ERP or an accounting system with a pre-built connector, then we can do all the things that we've talked about today, that full end-to-end solution, tax calculations, exemption certificate management, signature-ready PDF returns, and even file and remit on your behalf if you want us to. However, if you have an ERP or an accounting system that doesn't have a pre-built connector yet, and our list is growing, so yours might be on the to-do list, but if you don't worry, because we can still help. We have a few a la carte products that might be of use. We do offer tax rate files, and we call them, we call them enhanced. The reason we call them enhanced is because we've tried to take the complexity out of, if you've ever seen a tax rate file before, it's a very complex, hard to read type file. We've tried to simplify that as much as possible and make it a lot easier to deal with, and we can do that by state or by customized customer list. We also offer a standalone returns offering. So even if we're not doing the initial tax calc for you through your ERP, you can still take all that information, upload it to our portal, and we will have that information flow through to a signature-ready return for you, and again, have the ability to file and remit on your behalf if you'd like us to. And we also have a build-your-own connector program if you've got something that maybe will never have a connector written for, a homegrown system, but you'd still like to have our service. We do have a build-your-own connector program. Okay, so we're nearing the end of the webinar today. The first thing I want to do is thank all of you for taking the time out of your day to be with us here today. As a token of our appreciation for you joining us, both Peisner Johnson and ourselves have some special offers that we are extending to attendees of this webinar. Mike, unfortunately, ran out of time. He didn't have time to talk about it, but he's got a great kind of a deep dive, what's called a state tax assessment, where he looks at not only Nexus, but other important components like product taxability, exemptions, your returns product, use tax. They're doing a special pricing on that if you'd like a state tax assessment for $295. However, if you want to start a little more simply and you just want to have them take a quick look at your Nexus, we've also arranged with Peisner Johnson to offer a free Nexus review. And that's going to be for the first 10 people, first 10 companies to inquire with their FMT rep. Mike, thank you for offering both of those specials for these attendees. We appreciate it. From the Vertex SMB side, we have an awesome hot, I'm in Texas, so I can say it's a hot summer promotion, which is your first 3 months of monthly service is free. So if you think about it, right, no upfront cost, no upfront licensing fees, no implementation fees from our end, and your first 3 months for free. And if you've been thinking about getting into automation, now's the time to make that move. You do have to be registered by August 31st. You don't have to be live, so don't panic. You don't have to be live by August 31st. You just have to be registered, which literally takes about 5 minutes. And again, there's no charges for the first 3 months or until you go live, either way. And if you're already using another solution and you think, you know, Scott, I'd love to look at you, but I'm locked in. I really can't do anything for another 8 months, 6 months, 4 months, whatever it is, because I'm locked in with a competitor. You know, don't worry. Go ahead, contact us. Let's take a look at what your situation is. We do have some things in place that might be able to soften that blow if you want to make the move sooner. And so you're asking yourself, well, what if I want to find out more? What if I want to get in touch with Mike at Peisner Johnson? What if I want to get in touch with Vertex SMB and talk about some automation or some, you know, just sort of find out more? We've made it real simple for you. Reach back out to your FMT representative, right? Whether that's your sales rep, your consultants, your support people, Kevin. Reach out to FMT and they will point you in the right direction. And that brings us to the conclusion of the presentation part. I am not sure how long. I haven't looked at the clock here. We've got just about 5 minutes, it looks like, for question and answer. So you can see here, if you do have questions, if you could type them into the chat box. I hope you've been doing that throughout the presentation. Again, thank you so much for your time. Thanks to FMT. We appreciate the partnership. And I will hand it back over to Kevin now to facilitate the questions.
Yeah, absolutely. Thanks, Scott. I appreciate that. Mike, some excellent content there. I just like Scott said, I've learned a lot through the hour that we've spent here. We don't have any questions as of yet. I will, as people are typing those things on in, we'll let you know that from an FMT perspective, we will be following up with each and every one of the attendees. Just a quick call to get your feedback on what was excellent from the presentation itself, and also to see if you want to take advantage of some of the very special offers that both Mike and Scott are offering the attendees of this session here. So you should be getting a call from us a little bit later on this afternoon or sometime tomorrow morning. But we'll definitely be following up with each and every one of you before the end of the week to make sure that your needs are being met and that you can take advantage of these promotions before they expire. We'll give it one more second here. I know that some of the poll questions, you know, and Mike's information there was pretty robust, and so I'm not seeing any questions at all. We'll hold off for one more second here. Well, with that, you know, as both Mike and Scott said, all of us here at FMT, Vertex SMB, and Peisner Johnson, thank you for your attendance. We trust that the information here was educational, that you learned some things. You saw how Vertex can actually support the sales and use tax requirements of your business. We look forward to having one-on-one conversations with you over the course of the next day or so. We wish you all a great rest of your day, and thank you for your attendance. Bye-bye.